Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. So in today's show, we're going to look at the frac spread count. We want to look at rigs and the DUC count. And then we want to look at some of the updates that have happened coming out of the Middle East, as well as some additional flows when we look at crude. And then we're going to touch on some high-level econ data that I think is important to appreciate when you're looking at underlying GDP growth, and then how that converts back to oil demand. So one of the things that we want to turn to is the frac spread count. So we went from 263 to 269. So we had an increase of 6. Again, it's in line with what our expectations were when you look at the increases in the Permian and in the Eagle Ford. That's where we continue to see growth. You know, when you look at the Permian itself, we do think that there's probably another 8 to continue to increase. And we'll talk about why we think that in another 2 slides. But one of the key pieces is the running spread. So when we look at pieces, you know, this is always looking at what is the peak for the week. So say Tuesday has the highest, you know, we're going to take Tuesday, so you know what working spreads look like for the week. But running spreads have continued to increase, which gives us some decent look into what is going to happen really through the end of October and into the beginning of November. The question will then turn to, okay, well, what does the 6 weeks between Thanksgiving and New Year's really look like? Because we're starting from a much lower level than we have in the past. So there's always going to be some sort of slowdown, but maybe not as much as usual, just given the efficiencies that are being run and the optimization that has happened. So when we look at where we see additional activity, it remains in the Permian. It remains a slight amount in the Western Gulf, but we do see a bit more increasing in the Haynesville, because the biggest increases were the Permian, the Haynesville, and the Western Gulf. But the Haynesville, as we look forward, should also get a little bit more love as we also get some of the smaller basins. So again, we do see getting to about 280, 285. So another increase of, let's call it 11 to 16 is likely over the next week or two. Then we'll probably flatline, start to come down a bit. And then the question's really going to materialize of what does the end of November, but realistically December, look like. Now, as we turn to rigs, you can see that horizontal increased by 3. So we did get an increase of 1 in oil, 1 in gas. There was 1 drop of the directional, but a horizontal, as we've always talked about, is really that pivotal piece. And when you look at where we saw the biggest increases, New Mexico had a decline of 3, but Texas had an increase of 7. So again, that pivot back to and that increase in underlying flows and underlying runs. So then when we look at DUC counts and the DUC activity, I think it's important to appreciate that we've started to see a flat line, and we've actually now bounced from the lows when you look at the Permian. And this is what we were saying, is that the oil and gas guys, the E&P guys, we're going to find that comfort level. Where are we in this perfect point of rigs mixed with completion crews? And we were going to get to this steady state with this back and forth. And here's where we're finding that steady state. Haynesville's gone up again, you know, Anadarko's kind of flattish, but the key areas that we want to look at were Eagle Ford and the Permian. You can see that they're merging right here. And this is where we should start to see a little bit of an increase, and you'll start to see them manage this as we go forward. So as rig counts go up a bit, we should start to see that supporting some of that rig count, the completion crews. They're not correlated 1-to-1, but there is obviously a correlation between them, which is why we do look at rig counts. We do factor those in. You know, one of the big pieces that we've talked about is that Brent is going to live between that 90 and 92. And obviously we had that big increase from 92 back to about, you know, almost 94. Now it's pulling back. And the question's always going to come down to, what is the geopolitical risk? You know, where is geopolitical risk coming from? And if you look at the U.S., the more the U.S. produces, the less we have to rely on exports. Obviously, there's a crude grade swap, but there's still some, you know, protection. And if you look at the SPR, well, we don't need as much crude in the SPR as we see our increase in underlying production. Because remember, the SPR was meant to replace imported volumes. And if we're producing more, well, then we don't have to import as much. So we don't have to have the same coverage ratios that we have in the past. Now, here's some of the key pieces that have happened so far. We did have a U.S. Navy vessel that intercepted a missile, several missiles and drones in the Red Sea. Excuse me. When we look at some of the data, you can see here that it's showing that things were picked up closer to Yemen and the one to the left. But again, it was actually further north with the USS Carney, which was, again, it's important to appreciate that this was not an attack on a U.S. naval vessel. Just to be clear, because if you look at the launch point and where the likely sailing point was, you have to deal with nautical miles. So you're talking about something that's hundreds of nautical miles away from the launch point. So it's difficult to see, period, in the water. Then you have to deal with draft. You have to deal with the travel of the ship. So it's unlikely that the Houthis have the advanced technology to do that. It doesn't mean that it wasn't launched towards Israel. But we've also talked about the importance of creating that overlapping protection zone with the different coverage ratios, and this is one of the key reasons why. So the U.S. Navy intercepted that, stopping the advancement. The Islamic Resistance of Iraq launched drone attacks on the U.S. The United States intercepted 3 attack drones targeting 2 different bases, as well as 2 rocket attacks. One of them was shot down by a CRAM, which, if you think about, what is a CRAM? It's a Gatling gun, essentially. But there's 2 ways to intercept missiles. There's 2 ways to intercept rockets. It's using another rocket to intercept the rocket, using a missile to intercept a missile, or using a CRAM, which is the Gatling gun, when the rockets are not coming high enough but coming in a bit lower, because again, you don't want a missile hitting a rocket and then creating shrapnel. So the CRAM takes care of that. So, but it's not. It takes time, and again, there's always a certain amount of calculation risk. The United States intercepted 3 attack drones targeting 2 different bases in Iraq, and then obviously in Syria. So in total, there's been about 9 attacks on U.S. assets. So it's important to appreciate what that means, because there's some that are pushing back saying that we need to respond immediately. But when you look at what has happened, so a week before, a lot of the bases and areas of operation pulled their people out. So then they carried out these attacks. So realistically, do we want to go out and blow up an empty building, or do we want to let people come back to work before we go out and strike? So there's a certain amount of opportunity when you look at striking on our own terms instead of trying to immediately respond, wasting the missiles, wasting assets. There's likely a ground invasion this weekend, or at least coming up. So it would make a bit more sense to have a bit more strategy behind it. We do have one of our most advanced, if not the most advanced vessel in the Mediterranean, which can run pretty much ground command, a full command center. And I think people are underestimating what the response is going to look like. And not to say that we're going to hit Iranian assets within Iran, though, depending on what the stance needs to be, it's going to be important to look at what happens next, because there has to be a strong response to keep assets moving through Iraq, into Jordan, then trying to go from Jordan into Israel. What the Hezbollah will do coming from Lebanon. And then obviously the Hamas in Egypt, in Gaza, as that moves into Egypt. We've seen a lot of issues when you look at Egypt in terms of the Muslim Brotherhood, which was something that they had feared. And again, these are things that we're going to have to really keep track of, not only because it's going to be an active war zone, but also because there's a lot of, obviously, movement of products through this point, which is why we've talked so much about Russia in Ukraine when you look at it from a crude perspective, refined products, but also when you look at it from grains as well as fertilizers. this, I think, gives a really good indication of some of the ranges. Now, there was another chart that somebody had created that I'm trying to find again. I can't remember where it was, but it shows the overlapping nature of it, because you always want to have coverage levels in terms of sensors. And based on our A-10 Warthogs, in the UAE, our landing of assets in both Jordan as well as other areas, we have a fairly broad coverage ratio when you look at the ability to not only sense and deter missile attacks, but also to respond in kind. So again, things are being moved in position. So I think it would be an error to say that Biden's showing weakness because he's not responding right away. Again, this isn't about Biden or Trump or other. It's about strategy. It's about strategic nature of where things go next. And I think that obviously there's going to be way more to come, and that's going to keep that geopolitical risk in there. But the biggest thing that you have to look at is when you're kind of balancing the situation. So one of the things for Brent, we do think it's at 90.92 at this point. The bigger issue is going to be what happens on the demand front. So you clearly have OPEC plus with that voluntary cuts. You have the geopolitical risk, but you do have a demand issue. You've seen demand slow down in Asia, Europe rolling over, North America kind of bouncing around. But the bigger concern is going to be what's happening abroad. So when you look at China had a bit of a rebound off that Golden Week, versus where things are in 2022. But remember, right after Golden Week, you had a slew of shutdowns and a slew of slowdowns in terms of activity because of the outbreak of COVID. There was still zero COVID policy. So those are some key pieces to look at and key pieces to understand, as we do see a certain amount of hesitancy in China activity, as we highlighted in the Econ show. But it's also important to look at what volumes could come back to market, because one of the things that we've been talking about is that Venezuelan oil, to try to offset some of the losses, because there's going to be another crackdown on Iranian exports. So you still need to find ways to replace, especially that kind of crude or that crude quality. And Venezuela is really the easier spot, and we're likely to see that increase over time because India, China, and the U.S. have been sizable importers of Venezuelan crude. The U.S. has started to increase by giving Chevron the ability to do so, and we're likely to see that ramp up. And it's going to be, let's say about 500,000 barrels that can come back to market in the near term. Then when we start looking at other pressure points, this is an interesting one. When you look at the U.S. yield curve, has been rapidly steepening with the spread between the 10-year and 2-year, now at negative 0.16%, up from 0.71%. That's the least inverted curve we've seen since July 2022. So again, the whole point that we've said from the beginning, we highlighted in the Econ show, the curve isn't fixing itself because the front months or the short duration's dropping. It's really because the longer duration are going up, which is what we've been saying is going to happen, is that the whole yield curve is going up. And as that happens, you're going to get more pressure on emerging markets, more pressure on the economic growth, which is why I think people are starting to get concerned about what 2024 crude demand looks like, given some of these backdrops. And obviously people will do a bit less when you start to see, various war zones starting to crop up. Concerns, the U.S. issued a warning for all U.S. travelers to just stay vigilant. It's not a hard stop. It's just, use caution, try not to travel unless you have to, and just be careful when you're out there because there are some of these ongoing attacks. All the while, when you look at the number of consecutive months of the monthly leading indicator declines, you can see that they're going up. Leading economic index divided by the coincident economic index, you get an idea of just where we sit and the pressure points where we've never been at these levels without a recession. And as we've been saying, there's going to be a recession. It's not going to be this steep drop. It's going to be this perpetual kind of slow growth, which again is going to be compounded by rising yields, slowing consumption, stickiness in inflation due to that pressure on the monetary policy, while you have, that geopolitical risk. So that's why we see this pretty tight cap when you look at the crude market, because I mean, there's a lot of things keeping us from going below 90, from geopolitics to supply disruptions. But then as you go above, there's also pressure on demand and these other pressure points, which is why we see this being fairly capped as things continue to develop. So hopefully this was helpful. If you have any questions, please let us know. We'll keep track of the things as they continue to go on. But we hope you enjoy the rest. We hope you enjoy your weekend, as it's Friday and we were moving into the weekend. And we hope you enjoy the next week as well. Thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.